In today's video, we will be reviewing inflation data on the consumer side, also on producer side, what happening with foreclosures, and of course, real estate market update in Southwest Florida for January 2023. If you do like this video, please subscribe the button below. And this is Anna Eckstein with MVP Realty, Naples Ultimate Selling Team. All right, let's start. So I'd like to start actually with some revised forecasts for the real estate market through the United States as a whole. And then at the end of the video, we'll be reviewing a local real estate market update for the month of January. So stay to the end of the video, it's super important. So the big banks actually been to revise forecasts for 2023. Initially, you can see Goldman Sachs, they actually indicated that there would be probably downturns up to 6.1%. Now they actually been revised as of January 24 to minus 2.6%. And where the declines start happening in the real estate pricing, where we start losing value, equity in the homes. So you can see in a half of the 2022, that's where you start see decline in home values. This is, again, it's throughout the country. So we'll be reviewing our local real estate data, of course. But I just wanted to share with you this data and where it's being forecast for 2023 real estate market. As we continue to review this today's video, and we will be talking about the foreclosure, I do like to update you what's going on with inflation in the country, and we will be start with the consumer inflation. And I made this video in February. So this is today is February 18. And this is data that I'm reviewing with you. It's inflation data for the month of January. So we're receiving data for the month in February, but it's for the previous months. So in January 2023, our inflation consumer price index, the consumer price inflation is actually, it slowed, but only slowed to 6.4% in the month of January. The market expectation was that we will be going down to 6.2%. And so we did slow down with inflation by just only 0.1%, because month of December, we had 6.5% inflation rate. Now we at 6.4%. And you can see that some of the items would be some decrease, some increase. We can see the food inflation is decrease only by a fraction, and you can see the used cars is also continued decline, but not as much as they've been declined in the previous months. In the contrast of shelter, you can see it's been increased, as well as energy in the month of January. So the gasoline prices also been rising 1.5%, which been reversed from declining 1.5% in months of December. And the Fed expectation, of course, they like to see the inflation rate goes down to the 2%. I think initial expectation in 2023, the inflation rate will go down to 3%, in 2024 to the 2%. So this is, we can see months over the months, how inflation for the consumer was traveling. The highest peak of the inflation, of course, we saw in June was 9.1%. And now you can see months after months it's been decreasing, and currently we're at 6.4%. So if you do like, you can pause and review the table of items breakdown by the inflation months after months. You can see some of them being decreased, some of them will increase. I'm not going to go over this table, just please pause the video. You can review this for yourself. And if we're talking about so previously when we saw the numbers, this is year after year, right? Inflation goes down. This is month over the month. And you can see that it's increased to 0.5% months over the months. And interesting, because actually this table, what you see, it's been revised. just a release as a revise just a few, like a week or so ago. And the interesting part, if you see with my previous video and you see the same chart minus the January report, the update, you can see that this number in December was actually deflation of minus 0.1. And how the Federal Reserve was calculating the inflation in the past, they was actually calculating over a year's period. So I think that was like 2 or 3 year period that they take the numbers and then they calculated. And they decided to revise how they calculate the inflation, and they decided to take a single year and just and they revised the entire last quarter. So all of these numbers, if you see my previous year, they actually will be lower. Now they higher. Because of the revision that they actually did. And moving forward, we're going in, I guess, with revised table, how they will be calculating the inflation. So you can see the inflation rose by 0.5% from the previous months of the December. And now we're talking about the same inflation, but this is a core inflation for the consumers, and the core inflation is excluding volatile items such as food and energy. And you can see that also being actually increased month over month by 0.4%, and year after year it's increased to 5.6% as a core CPI. So moving forward, let's talk about the producer price inflation. So producer price index, that's what the inflation is for the producer. And you can see also that for the annual producer inflation, final demand, it's actually went up to 6% year after year. And also, it's actually market prediction forecast was 5.4%. So it's actually come in hotter than expected, which is not good, right? And also, you can see that month over month, it's also the market expectation was actually 0.4%, but it's actually increased by 0.7%. It's actually almost double. And it's honestly, it's very terrible news, because just think about, and you can see that we had actually deflation for that in December. It was minus 0.2 for the producer, because think about, if you're a producer and you're producing services and goods for the consumers, and now you experience inflation, you can do 2 different ways how you can deal with that issue. Is one is you can cut that thing in your margin, which you start making less profit, or the second is you can actually forward that to the consumer. So I always say that if you see the PPI, which is producer price index, increasing and producer experience the now inflation in a hotter level that the federal government would like to see, that probably your next CPI, which is consumer price index, will continue hitting up and going up. So we'll see the next CPI, and will be, of course, released in the month of March, and that would be for the month of February. So if we're moving forward, we can also see the producer price index year over year. This is the core, again, excluding those volatile items. It's decreased to 5.4, but it's still above about where the Federal Reserve would like to see the inflation. And also to see the month over the months, the forecast was increasing by 0.3 for the core PPI, and it's increased by actually 0.5, which is harder than expected. And you can see that 0.3 increase that we experienced in the month of the December. This is really interesting, because the Federal Reserve trying to fight so hard with inflation, and one of the indicators what they trying to bring a little bit up is actually unemployment rate. And And in the month of January, we actually expectation was the forecast of the jobs to be added was 185,000. Well, they added about 517,000. They added in the month of January jobs, which is actually brings our this is, you can see actually in December was got 260, right? And really jumped to 517, which is bring our unemployment level from the expectation would be the 3.6. That's what they forecast was for the month of January. The unemployment rate will go up from 3.5 to 3.6, but it's actually went down to 3.4% in January, and it's the lowest level since, think about, May 1969. Our economy is so strong with unemployment at 3.4%. This is just it. I just thought like it's just amazing, like how in the whole world they miscalculated such a huge job flow in the month of January. So this is, you can see the unemployment rate for the past 12 months. Where we've been and where we at right now. So U.S. retail, also interesting part was that the forecast was actually at 1.8%, but it's a rise on the month of January, but it's actually been any expectation to 3%. So this was huge. I mean, you can see some of the numbers if you pause and you can read. You can see that retail store was up 17.5%. Food and services, drinking places, 7.2%, motor vehicles and parts, 5.9%, furniture stores, 4.4%, electronic appliances, 3.5%, clothing, 2.5%. It's really, really interesting, you know, like how we started 2023. And this is just to show to you the retail chart we've been doing for the past year. You can see it's the strongest number in January that we experienced for any of the months in 2022. So building permits also rose by 0.5% in the month of January, which is give annual rate of 1.3 million in January 2023. And this is the chart. You can see what we've been doing with the building permits for the past 12 months. The mortgage rate in another actually situation, it's actually fell. No, I'm sorry. It's actually been raised to 6.39 for the end week of the 10th, 2023 from 6.18. And this is, you can see actually the chart. So this one is, we're going in weekly. Tracking the mortgage rate. You can see that previous week before the 10th, we had 6.18, and now it's 6.39. With that being said, the mortgage applications actually sunk by 7.7%, which they were up last month. In February was they raised by 7.4%, and this is actually the chart of those mortgage applications. You can see the mortgage refinancing index sunk by 12.5%. You can see also on the chart, and the purchase index also sunk by 7.7%. Week ended February 10th, and housing stats, it's actual starts. It's actually fell by 4.5%. So now this is, again, it's nationwide. We have to really see our local data to understand a little bit better those numbers, how they will be related to our market in Southwest Florida. But I just wanted to share with you the facts throughout the United States. And you can see, for example, it is breakdown by region. So Northeast is down by 42.2%, Midwest down by 25.9%, and in South, that's where we actually rose by 7.3%. That's why it's so important to understand your real estate market locally, because it could be so different throughout the country. So moving forward, the months over the months, it fell by 4.5%. Again, the housing starts And this is the chart. You can see what happening throughout the year. So headlines, gosh, we have so many different headlines. I feel like I get up every morning and there's like new headlines somewhere there that you can't believe it, like what happening from the balloons to all kinds of things. But this is actually was interesting. That survey that actually they done it, that 67% of Americans said the housing market crash is actually will be happening next 3 years. It's actually every 2 American believe that there should be housing market crash. I'll tell you this personally, I think that 2023 will be the most year with uncertainty. And I don't think I just don't think you can really even predict what can happen, because I feel like it could happen really anything. I mean, based on the data that coming in, based on things, how quickly the change come in as well. I think this is one of the years that it will go for those records. And if you look all those predictions, like to me, like I don't believe in any prediction. I'll say I will believe when we pass 2023 that we will be in December. Then I say like, oh, okay, this is kind of what makes sense, but we'll see. So anyway, some of the headlines, you can see the U.S. foreclosures filing surged by 115% in 2022. So wow, if the consumer reading something like this, they're thinking like, Jesus, the whole real estate market will be crashing down, and we're going to like 50% or whatever, right? And you can see that all these headlines you're looking, and there's the dates. Like this is published January 12, 2023. U.S. foreclosure activity doubled annually, but still below pre-pandemic levels. Foreclosure filing rose 115%. So where are we at really on the foreclosures? I think just so many people was just wondering, like, are we going in to see the price improvement? Are we going in to see a market crash? Are we gain more equity in the houses that we expect in 2023? And I think at the end of the day, do like to share with you some facts that I thought was very interesting. So one of the source is called Atom source that actually study and follow the foreclosures and the real estate market. It says that a leading curator of real estate data nationwide for land and property data today released that its end the year of 2022 foreclosure market reports will show foreclosure following defaults, notices, schedule action, and bank repossessions were reported at 324,237 U.S. properties in 2022, which is up 115% from 2021, but down 34% from 2019. Before the pandemic shook the market. Foreclosure filings in 2022 were also down by 89% from a peak of nearly 2.9 million in 2010. That's crazy. So if you think about those headlines, they're correct. So we are up at 115%. But I would like to share with you a chart that represent from 2005 to 2022, and you can see the filings of the foreclosures that at 324,000, it's still over 324,000 families suffer this horrible situation and wish they wouldn't. But this is not even near to where we actually been in 2008 or 9 or 10. You can see those numbers in millions. So with that foreclosures, yes, we have foreclosures, but is that can move the market into collapse situation? I think the numbers speaks themselves. My opinion at these numbers, of course, no, but you just never know what the future holds, right? So wanted to share with you from the 2017 to 2022 chart, and you can see the average between 2017 and 2019, we had just shy of 600,000 foreclosures, which is in 2022, we had 324,000 let's say 25,000, close to 325,000. So you can see that foreclosures actually for the past 3 years been really short and in decline. Well, we did had a COVID. This is actually would like to share with you from Executive VP Market Intelligence for the Atom. The 18 months after the end of the government's foreclosure moratorium, and with less than 5% of 8.4 million borrowers who enter in CARES Act forbearance program remaining, foreclosure activity remains significantly lower than it was previous in the COVID-19 pandemic. It seems clear the government and mortgage industry efforts during the pandemic, coupled with a strong economy, and have helped prevent millions of necessary foreclosures. I think it's amazing. I think they definitely did really good job of doing that. So the bottom line is there will be an increase in foreclosure over the next year from the record low levels, but there will not be a huge wave of distressed sales as happened following housing bubble. The distressed sales during the housing bust led to cascading prices decline, and that will not happen this time. This is the quote from Bill McBride, founder of Calculating Risk. Let's talk about our local market. So what's happening in Southwest Florida? So I decided to do something different a little bit, this market update, and I think I really like it. And moving forward, we actually will be reviewing what happened a year ago. So we will compare January 2023 to January 2022. That's where I always compare to a year. But also I like to compare what happened last month. So we will do today 2 different comparisons. One is January 2023 to January 2022, and then January 2023 to December 2022. And of course, we'll be reviewing 4 cities: Naples, Marco Island, Bonita Springs, and Estero. So let's start with active inventory. So active inventory is actually listings of the properties, could be condos and single family homes, or townhouses, attached villas, like the active inventory that that is active at the end of the month. So you can see that we're talking about first single family homes. So you can see that if you compare January to January a year ago, you can see that those active inventories is up by Jesus. I mean, like, think about in Estero by 182%, Naples 117%. I mean, it's like, this is crazy, the numbers, right? And you can see how that even changed for the December. So we added those active inventories. So what that really means to you is that when you go shopping for the homes, you have so many homes to view now compared that you could do a year ago. They almost 200% up. And this is, if you're a buyer, this is like super awesome news for you, because now you have tons of homes to view, like no worries that there's plenty of properties to view and find the right one. And you can see condo, the same situation. Condo even over 200% in Marco Island as an active inventory. Now, again, active inventory is the inventory that is there for the month of January. The people can walk and see the places. And so this is excellent news if you buyer. Now, if you seller, you have to find the real estate agent who can show your property, showcase your property more different ways and better ways as possible, because guess what? Now you have a competition, and from 100 to 200% more, you have a competition that you had a year ago. So you just have to be more creative and make sure that you showcase your property to as many people as you can in the best way as you can. So let's talk about the new listings. So we were talking about the inventory that is on the market. The new listing is something that is coming on the market for that month. And we're talking about the January, right? So if you do like, you can see the numbers of the new listing come in for single family homes and the condos for all the 4 cities. I'm not going to start telling those numbers, so you can pause, so you can review the charts. But I do like to talk about the percentage of the new listing. And again, you can see in Bonita Springs, if you compare to a year ago, you have 140% more listings coming to the marketplace. Again, if you're a buyer, it's awesome. You have plenty properties to look through. If you're a seller, you have to be creative and find the best real estate agent as you can do, so you can get the top price for your property. And for getting the top price, you have to show up your property to as many people as you can, and you have to be comparable to the market, because now the buyers going into your neighborhood, and maybe before, a year ago you had maybe 5 homes for sale in your neighborhood. Right now you have 25 homes for sale. So you have to be very wise when you decided to list your property. So with who you work in is really matter, is what kind of results you will get in today's market. So if we continue looking for a month supply, so what that means is it's estimation of the number of months it will take to basically sell your property, right? So to deplete the current inventory given recent sales. So how many months, if you put in your property on the market, how long would take it? That's your average. So you can see, and numbers are totally crazy. From a year ago, you can see that in Marco Island, that number is up by 453%. Guys, I mean, this is like super crazy. And even if you compare to December, right? This is like 30 days ago, technically. It went up by 26%. Why? Because those 2 previous charts that I just showed to you, the data, all the active listings are up, the new listings are up. So the market start coming in. There's more homes for sale. So why? This is the reason why all these numbers are up. Again, if you're a buyer, this is like, gosh, this is like awesome. I mean, you can look homes all day long for like, I don't know, nonstop. But anyway, I just had the buyers actually in town, and we looked like 39 homes. We actually they calculated 39 homes, and they found the one, which is really beautiful. So anyway, moving forward, we will see also data for the showing. So if you're the seller, you have to pay attention. They're super important, because now you can see that from a year ago, on all the, regardless if you actually have a single family home in Southwest Florida or condo, you can see that numbers of showings is how many showings you have, right? Decreased by, on some instance, over 50%. But let's say on average, I would say it's 50% declining in the showing, which means that it's a less buyer demand, right? So in December, you can see nicely throughout the chart that all these numbers being increased by from 38 to 40% to 50% in some instance, which is kind of shows to you is where we at. So it's obviously shows seasonality, because December, everybody thinking about holiday, Christmas, they're not thinking about going shopping for a house. They do like to close on existing pending sales for sometimes tax reasons and all kinds of different things, but you can see how nicely it's increased. So January, now, our snowbirds in here, and people start looking homes. So the median percentage price of last list price. So what that means, it means that that's a price reduction. You can see the price reductions, not too heavily across the board. You can see from year to year, January to January, we actually, the price reductions were very minor, from 3.7 to 2%. And they come a little bit mixed on December, some up, some down. It's kind of, it's just, I thought it was interesting to share, but that wouldn't give me like anything like get super excited. So the pending inventory. So the pending inventory, you can see that pending inventory is the inventory, the property goes under contract. That's what means pending inventory. It could be pending with contingency or just pending. And contingency obviously could be all kinds of financing contingency, inspection contingency. So this is overall, it's regardless if it's contingent or just pending, it's captured both. And you can see that in month of January, a year ago, we're losing quite a bit. We only gained 5% in actually Bonita Springs, but you can see across the board that we have less homes that went under contract in the month of January compared a year ago. And in Marco Island, as much as 37%. But look at this, in the month of December, this is where the game changer starts. Remember we was talking about that people just in December, they don't really shopping around, right? But you see how things start changing in January? So in Marco Island, there's 162% went under contract in the months of January compared to the months of the December. In Naples, over 51%. Condos in Naples went over 81%. So you can see how this number start changing. And when you look the chart after chart, you can see, oh, okay, this makes sense because we have more active listings, or this is, the people start coming to town, things like that. So you can really start see how things changing. So median price per square foot, would like to share that with you as well. So in Naples, you can see the median price per square foot is $367 for single family homes. This is what, it's interesting to see how overall price per square foot, but this means like so many different things. Like if you're in a neighborhood specifically and you say, oh, this is my average price per square foot. No, absolutely not. This number would not even related to you, because think about, we have neighborhoods like there's golf access homes, the price per square foot will be over, let's say 2,000 per square foot, right? And there's some that would be, well, less. This is just the medium for the Naples area, or for Marco Island, or for Bonita Springs. But if you do interest in more in detail reports on your neighborhood, I'll be most than happy to provide to you via email report just like this for your neighborhood. Then you can really understand what the median price in your neighborhood, if you're thinking of buying there, or if you're a seller and you're thinking of selling there, if you're a seller, I will be provided to you not only this report, but the custom CMA for your home to see what the true value is for your home can be expected to sell in today's market. So if you do, if you are a seller, if you're thinking, just please reach me. My number always will be listed below this videos, and it's very easy to dial. It's 239-249-4476. All right, so let's talk about the medium sales price. Again, it's for the each city. Your neighborhood will be different, of course, and you can see that medium sales price is actually went up for the Naples area, single family homes by 6% in January, and went up actually by 26% in Estero. In the December, you can see it's kind of a mixture of some a little bit down, some up, but we're talking about very minor, like 1-3%. In Estero, it's actually went up by 26%, so that's a little bit more significant. For the condos, you can see as well in Bonita, it's actually went up compared to the January of 2022 by 33%. And actually quite interesting. And in December, it's went up for the January compared to December by 17%. So the dollar volume also wanted to share with you. And it's basically what it is a sales price for all sales which close during the month of January. I just thought was piece of information that I like to share with you, so you can see that the dollar volume went down for the month of January compared to the 2022, and in December it's actually went up for majority parts. A little bit was down in Naples area and Bonita Springs. And our last slide that I'd like to share with you for today's video is actually would be the closed sales. So the closed sales is a property actually that closed in months of January. So not necessarily it has to go under contract and close. So that could went under contract, let's say in December or November or perhaps even in October, or who knows if it's new construction, maybe it's been, if it's been recorded in MLS. So you can see that we're really down in January 2023 with the closed sales compared to the January 2022. On the single family homes, it's down throughout the board. You can see as much as 57% down in Marco Island. And we also actually down for with the closed sales for the months of January compared to even last December. But remember, I told you just a few slides back that a lot of people that they do like to close at the end of the year in December to actually close the transaction so they can utilize that for the tax purposes. And for me personally, my biggest months was the close. Like if I take, and again, I'm just, one agent, but to me personally, if I take whole my entire year, the number of actually closed deals, not necessarily pending but actually close, it would be the fourth quarter of the each year. And the biggest one is probably would be that December, because everybody whoever wants to close in that year, they're trying to close by the end of the year. So you can see across the board that reflects on this chart. So so just thought it was really nice to share with you. I hope you found this video helpful and resourceful for you and for your family. And if you're a buyer and you're thinking of purchase property in Southwest Florida, I would love to be a resourceful agent for you and for your family and help you to find a great property that fit all your criteria and needs for your family. And if you're a seller and you're wondering to sell the property in Southwest Florida, I would love to give you a detailed market report for your home and your community. It's very easy to reach me. My phone number is 239-249-4476. My name is Anna Eckstein, Naples Ultimate Selling Team. And if you do like to receive further video notifications and you like our videos, just please subscribe the button below, and I look forward to seeing you in the next video. Thanks so much. I hope you have a great day. Thank you.